Hello everyone, welcome to our discussion sessions on official mock exam issued by ACCA for September 2025 exam attempt for our Advanced Taxation exam. In our today's class, we will be looking at question number 1 of this official mock exam paper. Along with the discussion of this question, we will also be referring multiple topics which are discussed in this exam paper through my life-saving document, which are these summary notes, in which I have summarized the entire course of advanced taxation in just 57 pages. We will be referring all of the topics which are included in this exam paper. It's a very great document. You can refer any topic by just searching around it. Like for example, if you want to refer gift holdover relief or if you want to refer rollover relief, you can revise all the relevant topics through navigating around this document. Okay, so we will be starting with this question number 1 of this official mock exam. We'll be reading the entire question, the introduction, all the exhibits, requirement tab, and then we will be actually drafting the whole answer in our today's class in this word processor document so that you will be able to understand that how you have to actually draft the answers in your examination. These complete exam paper discussion sessions are really important in your finalization phases of your exam preparation, because it gives you an idea that how you have to deal with all of the topics together when you go for your actual examination and you also have a time restricted situation. In this series of this past paper discussion session, we will be looking around 7 complete attempt exam papers. Then I give 3 mock exams to my students, which they have to attempt on their own and send me for marking and feedback. So this all is a very important phase for your exam preparation, and it is one of the important reasons that around 50 of my students have secured nationwide positions in this examination only. So that's very important for your exam preparation. Let's start with our discussion. It will be a detailed class because we'll be reading the entire question, then drafting whole of the answer. So your patience and concentration throughout the class will be really important. You should assume that today's date is 3rd September 2025. You are an ACCA student working for a firm of accountants. Your manager has been in discussion with Patrice, the managing director of Abred Limited, a client of your firm. The discussions concern Dunster Limited, a company which will be incorporated on 1st April 2026. Patrice's sister Camille has also been a private client of your firm for a number of years. So it's just an introduction. He's introducing us to the scenario. Okay, we are in this situation, a ACCA student working in a firm of accountants. Our manager has been in discussion with Patrice, who is the managing director of Abred Limited, a client of our firm. Then there is discussion about a new company, Dunster Limited, which will be incorporated. Then Patrice's sister is also our client. So there will be multiple taxation situations, in addition to some ethical considerations which have been raised by your manager. Advice is required in respect of the corporation tax deductions available in respect of the capital items, the relief available for trading loss and chargeable gain, the recovery of VAT on an office building, and the implication of a sole trader versus a company business structure. So the examiner has told us about his basic expectations in this scenario. There is some issue relating to tax deductions for purchase of assets, then loss relief and chargeable gain thing, recovery of VAT, and a planning between a sole trader and a company business structure. The following exhibits, which are available on the left-hand side of the screen, provides information relevant to the question. Exhibit 1, Dunster Limited, we'll read it. Exhibit 2, Abred Limited. Exhibit 3, Camille. And Exhibit 4 is an email from our manager which brief us the work which we have to do in relation to this client. The information should be used to answer the question requirements within your chosen response options. There are 2 response options, word processor and a spreadsheet. As we will be reading the question, then we'll be drafting the actual answer. So you will actually learn that how you have to decide between these two response options and how you have to draft your answer. Okay, but for all of that, it's very important that you listen to the things carefully so that you can understand that how you have to deal with all of the scenario and the drafting of the whole answer. Let's look at it. Dunster Limited, which is our exhibit 1. Extract from an email from Patrice dated 1st September 2025. Dunster Limited. As I mentioned when we last spoke, Dunster Limited will be incorporated and begin trading on 1st April 2026. It will be a UK resident company and will prepare accounts to 31st March each year. Dunster Limited will only make wholly taxable supplies, which means either standard rated or zero rated. Because standard rated and zero rated are taxable supplies, and then there are exempt supplies. Okay. Ownership of Dunster Limited. 3 alternative ownership structures of the share capital are being considered. Structure X. Abrid Limited will own 80% shares. BOFA will own 10%. Mr. Blaine will own 10%. See, when Abrid will have 80% ownership, it will simply form its group. Okay, not an accounting group, a tax group, a capital gains group, and a 75% group, both of them. Because for both of them, direct ownership requirement is 75%. And there is no indirect ownership situation in this case. Abrid, BOFA, and Mr. Blaine owning Dunster Limited, so it's a direct subsidiary. So in structure X, this Dunster Limited will become a group company with Abrid Limited. Both capital gains group and 75% group, both of them. Then structure Y, Abrid Limited will own 65% shares. Now when Abrid Limited will own 65% shares, in that case, capital gains group or 75% group cannot be formed because direct ownership is less than 75%. See again, if you don't remember the rules, just go to the notes, write capital gains group. Okay, here you go. You need direct ownership of 75%. That's the first step. Then indirect is the subsidiary. That is not the case. Abrid is directly owning this company. Then for 75% group, you again need direct ownership of 75%. So with 65% ownership in your mind, you cannot form a capital gains group or a 75% group. Then another situation is of consortium. But for consortium, there should be company ownership situations. Collective holdings of the companies should exceed 75%. Here the remaining shares are held by Mr. Blaine. Individual cannot be a part of consortium. Again, if you don't remember the rules, just go and write consortium. 20 or fewer companies having a combined holding of 75%. Okay, combined holding of 75%. Individuals cannot be consortium members. It's the company's situation. Here it's Mr. Blaine. Mr. Blaine will be an individual. One time one student asked me that, said, how do you know that Mr. Blaine is an individual and he is not a company? I literally said, brother, I don't have an answer for it. Mr., Mrs., these refer to human beings. Okay. So Mr. Blaine is an individual. Please don't ask such questions. Then in structure Z, Abrid owns 70%, BOFA Limited owns 30%. Yes, now a consortium can be formed because it is the situation of company's ownership. Okay, we will discuss each of the structure. Abrid Limited, BOFA Limited, and Mr. Blaine are all residents in the UK. Abrid Limited and BOFA Limited prepare accounts to 31st of March each year. Mr. Blaine is a sole trader who prepares accounts to 31st March. Abrid, BOFA Limited and Mr. Blaine are not connected to each other in any other way. Okay, so their only connection will be due to the share ownership. Budgeted results of Dunster Limited for the year ending 31st March 17. Dunster Limited will have no income or chargeable gain in its first period other than from its trade. It is budgeted to make a tax adjusted trading loss in the period. Okay, since Dunster Limited will make a loss, therefore these group situations will be relevant. In structure X, we'll have a 75% group. In structure Z, we will form a consortium. In structure Y, there is nothing. Because 65% ownership, you cannot form a group, and with an individual, you cannot form a consortium. Then, Dunster Limited's capital asset purchases 1st April 2026. Okay. Now, Dunster Limited will purchase the trade and assets of a business from an unconnected third party on 1st April 26. The purchase will not be treated as a transfer of going concern for purpose of that. It will be a simple purchase of assets, not a purchase of a going concern business. The assets of the business include the following capital items: goodwill, £40,000, registered trademark, £30,000, office building, £270,000. See, we are reading the data. When you are reading the question for the first time, it's very important that you read with patience. Don't rush. Gather maximum possible data. That's the best thing you can do while you are reading it for the first time. The goodwill will be amortized over 10-year period. Okay, they are amortizing in their accounts. For tax purposes, there is no amortization of goodwill. For tax purposes, there is no amortization of goodwill. Again, you will go to your summary notes, you will write intangible assets. Okay, in the intangible assets, you can find that the company can claim amortization on intangible asset at accounting amortization and 4% of cost. But goodwill is not allowed for tax purpose. There is no amortization on goodwill. Okay, now the trademark will not be amortized. They are not amortizing in their accounts. But for tax purpose, it will be amortized. For the tax purpose, it will be amortized. Maybe they are not amortizing in their accounts. That is their issue. The office building is 20 years old. So there won't be any structured building allowance. It is an old building. Okay. Dunster Limited will use 2/3 of the building as its headquarters. The remaining third will be rented out. Dunster Limited will not make an election to opt to tax for the office building for VAT purpose. So this means that from VAT purpose also it will remain in exempt category because it's an old building and opt to tax will not be made. An old university friend of mine has suggested that it is possible to claim annual investment allowance in respect of office building. That is wrong. Annual investment allowance is a capital allowance which is on plant and machinery, not building. On building, we get structure building allowance, but that is also for the buildings after 1st April 2020, not on a 20 years old building. I do not think this is possible, but I would be grateful if you could clarify this for me. Yes, we will clarify. This is our job. So this is the first exhibit which I have read. Apparently, I feel that there is nothing difficult in it. Now let's look at exhibit 2, Abrid Limited. Okay, what he's saying. Schedule of chargeable gains dated 1st September 25. Abrid Limited has entered into a contract to sell 3 buildings. The buildings have always been used in its trade. Queen's Building, Rune Building, Clay Building. You have chargeable gains for all of them. You have sale proceeds for all of them. And you have been provided with the date of disposals. So we'll see that how we have to use that data. Then we have data about Camille. See, that is a completely different portion of the question. Sir, how did you know? Camille was the sister of Patrice. It's a completely different debate. Okay. So what I will do is that for now, we will hold this exhibit. Camille, we will hold this exhibit because if you remember the introduction, okay, if you remember the introduction, your manager has been in discussion with Patrice, the managing director of Abrid. The discussion concerns Dunster Limited, which will be acquired on 1st April 26. All related discussion. Patrick's sister Camille has been a private client of your firm. So we will read this later. First, let's read the relevant requirements which we can solve from the data we have covered till now. Okay, now, work to be carried out. Extract from an email from your manager. Please carry out the following work. Part A. Notes for the meeting in respect of corporate matters. Prepare notes for us to use in a meeting with Patrice in respect of Dunster Limited. The notes should be set out in a manner which will make it easy for us to refer them during the meeting and should address the following issues. Part 1. Purchase of capital items on 1st April 26, only a 3 marks requirement. Explain the corporate tax deductions which will be available in respect of the purchase of the capital items by Dunster Limited on 1st April 26. Comment on the validity of the advice received from the Patrice University friend. Very easy 3 marks requirement. Very easy 3 marks requirement. Okay. See, you just have to respond to the instructions of the email from your manager for 40 marks. All the technical marks are available here. Okay. We will be reading each of the requirement and answering them. And then there are 10 professional skill marks for communication, where you make a format for the notes for the meeting, the headings and subheadings you give, the clarity in your communication, analysis, in-depth analysis of the tax rules, evaluation, either side review, favor, against, skepticism, challenging, like you will be challenging the Patrice friend advice, commercial acumen, business insight, practical insight, not just sticking to the theoretical rules. Now, it's not necessary that in every requirement all professional skills will apply. As we answer it in a proper manner, these professional skills will be automatically covered. These professional skills will be automatically covered. Okay. So now we are looking at this question. Okay. Our question, we are working in a firm of accountants. Our client, Patrice, who is the managing director of Abrid Limited. Okay. So the name of the question you can refer as Abrid Limited, Dunster Limited, and Camille. Okay, there is no issue in giving any name to the question. There won't be any marks reduction for it. So please don't worry about it. Okay, now. So now we are starting with this, where we have to create notes for the meeting in respect of the corporate matters. Okay, so we are starting for this thing. I will copy this part. Okay, I will copy and I will paste it here. Okay, now we have to prepare notes for the meeting. How do you prepare notes for the meeting? To the client files. See, obviously notes for the meeting will go inside the client files. You are not addressing to anyone. You are preparing the notes for the meeting. So they will go in the client files from. Now, see, don't write your own name here. Refer yourself as a tax senior or a tax supervisor, because manager is communicating to you. So you may be a tax supervisor. Okay. Subject. What is the subject for which we are preparing these notes for the meeting? We are preparing notes for the meetings in respect of Dunster Limited. Okay. So corporate tax matters in relation to Dunster Limited acquisition. Okay. Date has been given in the question. It's 3rd September 2025. It's 3rd September 2025. See, to, from, subject and date. If you want, you can write the client name also. Client here is Dunster Limited, for which you are discussing it. See, this format of notes of the meeting, or either it is a memorandum or it is an email, It goes in a similar format. Just you are, when you are writing an email, you address it to the manager. Otherwise, you refer it to the client files. To from the client for which this document is being developed. It is being developed in respect of Dunster Limited. What is the subject and the date? A simple format which is followed always. So don't take an extraordinary stress for it. Okay. Now we are looking at part 1, which is purchase of capital items on 1st April 26. That I will paste here, and this is my first requirement of 3 marks. See, many students say me this thing that, sir, we are not able to start the question in the proper manner. Maybe you guys do extraordinary thinking. You take extra stress. It is just a routine thing. In this series of past paper revision session, we are looking at 7 complete attempt papers. So you have to just solve it. Start it. Don't do overthinking. I picked it from the question, 2 from client subject date, then purchase of capital items. Let's start it. Okay. Now, what are the capital items which are purchased? Go and look at it. These 3 capital items are purchased: goodwill, registered trademark, and office building. In relation to goodwill, you don't get any tax allowable expense. So whatever accounting amortization they are doing will not be an allowed expense for the tax purpose. For the trademark, they will get amortization for the tax purpose, which can be higher of 2 things: accounting amortization and 4% of cost. Since they are not doing any amortization in accounts, so it will be 4% of the cost. For office building, there is no deduction. It's a 20 years old building, so no structure building allowance also. Okay. And his friend advice is wrong. AIA is on plant and machinery. Okay. Now, in relation to goodwill purchased by Dunster Limited, there will be no deduction available for corporate tax purpose. Okay. Accounting amortization done by Dunster Limited will be reversed for corporate tax purpose. Okay. Tax department do not allow any deduction on goodwill. Further, in relation to trademark, amortization will be available for tax purposes at higher of 2 things: accounting amortization and 4% of cost. As trademark is not being amortized by Dunster Limited in its accounts, therefore deduction for tax purposes will be 4% of cost, which will be how much? What was the purchase value of the trademark? It was 30,000 pounds. I will copy the pound sign from here that we will use throughout the question. Copy, and every time whenever I'll have to paste, I will press Control V. 30,000 into 4%. So that will be 1,200 pounds. Okay, so this will be your deduction available for trademark. See, it was a simple 3 marks question. In relation to goodwill, there is no deduction. You can go and refer it. Goodwill is not allowed. For rest of the intangible asset, it's accounting amortization and 4% of cost. Okay, for trademark, you will get amortization at higher of accounting amortization and 4% of cost. As trademark is not being amortized in its account, therefore deduction for tax purpose in trading P&L will be 4% of cost. Lastly, in relation to office building purchased, no tax deduction will be available to Dunster Limited, as it is a building of before of pre-April 2020 period on which no structure building allowance will be available. Okay, it is a 20 years old building. Now, if you remember structure building allowance, original launch date of structure building allowance was 2018. But for our examination, we follow the applicable date of April 20. You can refer any of them. There is no issue in it. Okay. Now, it is a 20 years old building. Okay. So, if you want, you can refer date of October 18. That is also acceptable. And if someone refers date of April 20 for our examination, that was also the applicable date. So, you can refer any of them, whichever you remember. Okay, so both are acceptable. I'm writing October 2018 because that was the original launch date of this relief. But if someone refers April 20, that is also acceptable because for exam purpose, the examiner has stated that we consider structure building allowance from April 20. Okay, because that was the date from which it was introduced in our course. Okay, then Patrice friend's advice in relation to claim of annual investment allowance on office building is wrong, as annual investment allowance is a concept of capital allowances which is available on plant and machinery. Okay, it is not available on land and building. So, if you look at it, explain the corporate tax deductions which will be available in respect of the purchase of capital items by Dunster Limited on 1st April 26. Comment on the validity of the advice received from Patrice University friend. How many marks were there? 3 marks. We have already written extra. We have written 4 points. So restrict your discussion. You are giving examination. You are not writing a general email or something. There were 3 marks, so don't go beyond 3 marks. Goodwill, trademark, office building. Even if someone wouldn't have written this point and instead just written this point, then also he would have got 3 marks. Like this one was not necessary. You have 3 marks, write 3 points. Don't do extra writing. Okay? Now, coming back. Purchase of capital item is done. I believe very easy one. There wasn't any difficulty. Now, part 2. Consideration on alternative ownership structures of Dunster Limited. Okay. So now let's look at it. I want you all to listen to me carefully. Loss relief. Explain the extent to which budgeted trading loss of Dunster Limited for the year ending 31st March 27 would be available for offset by Apparid Limited, BOFA Limited, and Mr. Blaine under each of the 3 structures. See, first of all, make it clear that individuals cannot get any portion of the loss relief. Groups and consortiums are between the companies. See, the loss is of Dunster Limited. The loss is of Dunster Limited. That loss can be accessed by its group companies. So group is between companies, not with an individual. So the first question he's asking is about the loss relief. Okay, let's deal with it hand on hand. It's very easy. Loss relief. Now, first of all, in relation to the loss relief, Apparid, BOFA Limited and Mr. Blaine under each of the 3 structures. Mr. Blaine cannot claim any loss relief in relation to loss suffered by Dunster Limited, as individuals cannot be part of any loss group or consortium structure. First, let it make it clear for Mr. Blaine that you please stand outside. You cannot get any loss relief. Okay. Now, loss relief, which can be claimed by Abrid Limited and BOFA Limited, will depend on different ownership structures that different ownership structures which may lead to formation of 75% group or consortium, because we are talking about trading loss relief. Okay, trading loss relief can be relieved through 75% group or consortium to other companies. Okay, so first of all, we excluded Mr. Blaine from this debate. Now, for Abrid and BOFA Limited, it will depend on different ownership structures. Structure X, Abrid Limited will form its own 75% group, access the entire loss of Dunster Limited. Because in 75% group, you can claim the loss relief. There is no issue in it. There is no percentages getting applied. Now, in structure X, Abrid Limited will form its 75% group with Dunster Limited as its ownership percentage is 80%, which exceeds minimum requirement of 75% ownership for 75% group formation. In this case, Abrid Limited will be able to relieve its incomes against entire loss of Dunster Limited. See, just try to understand. Individual cannot be found part of these loss groups or consortium. Now, Abrid and BOFA are two parents which have the shareholdings. So they are accessing the loss of Dunster. Abrid and BOFA owning Dunster, which has the loss. So whether it's a 75% group or consortium, that we have to look at. In structure X, Abrid Limited will have more than 75% ownership. So it will just form its 75% group. Okay, it will access entire loss. In this situation, BOFA Limited cannot get any loss relief against loss of Dunster Limited, because now it is a group company of Abrid Limited. It is part of Abrid. In structure Y, no loss relief can be claimed by either Abrid Limited or BOFA Limited, because if you remember the structure Y, 65% by Abrid and Mr. Blaine having 35%. So no 75% group and no consortium, because individual cannot be part of consortium. Okay, by either Abrid Limited or BOFA Limited, as neither 75% group was formed nor consortium was formed. Okay, Abrid Limited owns 65% shares and remaining shares are owned by Mr. Blaine, who cannot be part of any group or consortium formation, loss group or consortium formation. Okay, you cannot consider individuals for this perspective. And at 65%, you cannot form any group structure, loss groups. 75% group, capital gains group. For consortium also, collective ownership of 75% is required. In structure Z, consortium can be formed as, why consortium can be formed? Because now Abrid owns 70%. At 70%, he cannot form his own group. He needs someone else. So he will have to join hands with BOFA. Now it's a company. Here he cannot join hands with an individual. Okay. In structure Z, consortium can be formed as Abrid Limited ownership is 70% and it cannot form its own 75% group. Therefore, it will join structure with BOFA Limited, who owns 30% shares, to form a consortium. In consortium structure, collective holding of companies should be at least 75%. This will be satisfied here as Abrid Limited and BOFA Limited have combined holding of 100% in Dunster Limited. In this situation of consortium, Abrid Limited will be able to relieve loss of Dunster Limited up to 70% of Dunster Limited loss only. Okay, and BOFA Limited will be able to relieve 30% of Dunster Limited loss against its income. See, in consortium, it will get divided, whatever your ownership is. Since Abrid owns 75%, 70%, so Abrid will have excess of 70% of the loss and BOFA will have excess of 30% of the loss. See, many students get confused. Sir, in group structure, we don't do 80%. No. When it is our group, we have excess of whole thing. When it is our group, we have excess of whole thing. When it's not a group, it's consortium, you have to divide. In consortium, the percentage gets applicable. You can just go and search consortium. Okay. Every company can access the loss according to their holding percentage. According to their holding percentage. So first of all, we excluded Mr. Blaine. And we discussed that it depends whether it's a group or consortium. We talked about structure X, structure Y, and structure Z. I believe it wasn't difficult. In structure X, it was a straight 75% group of Abrid Limited. Structure Y, no group, no consortium, because at 65%, nothing can be formed. And you cannot include individual with you. Structure Z, we will go for consortium because we cannot form our own group. So obviously, we have to join hands. Now comes the second thing, rollover relief. Let's look at it. Rollover relief, what he is saying here. Explain whether or not Abrid Limited will be able to roll over the chargeable gains in respect of each of its building sales against the office building to be purchased by Dunster Limited. See, Abrid Limited was selling these three buildings. If you remember, Quinns, Roon, Plie. Abrid was selling these three buildings. Abrid Limited is selling these three buildings. To whom? To unconnected people. It is selling to general people this. The question is whether Abrid will be able to roll over the gain, defer the gain in respect of each of the building sales against the office building purchased by Dunster. Now, if you remember, one of the privilege of capital gains group, capital gains group was that rollover relief can be claimed by disposals made by one of the group company and acquisitions made by other group company. So rollover relief, if you remember, it is only possible when we talk about capital gains group. Capital gains group, if you remember, in capital gains group, this privilege number 3, here you go. Rollover relief can be claimed on disposal of assets by one group company and reinvestment in qualifying assets by another group company. So here Dunster Limited purchasing the asset, buying the asset not from the group, from unconnected people. Because if it will be an intra-group transfer, there won't be any gain on it. It is not intra-group transfer. These are transactions from outside the group. It purchasing the building and another group company making the disposals, so the gain can be rolled over, it can be deferred. So whether rollover can be claimed, and explain with supporting calculation which of the aberrant limited gain should be relieved in order to obtain the maximum benefit. How many marks? 15 marks. So yes, first of all, rollover can be claimed, but that is structure X only. Because in structure X only, capital gains group is formed. Because in other structures, the capital gains group cannot be formed. At 65% or 70%, direct ownership requirement is not satisfied. For capital gains group, you need direct ownership of 75%. First, direct need to be satisfied and indirect. It's not or, and. So first you need to look at the direct ownership. So, Abrid Limited can defer its gain of sale of its buildings against acquisition of office building done by Dunster Limited through capital gains group. Okay, capital gains group can only be formed in structure X, acquisition method for Dunster Limited, in which Abrid Limited will have or will acquire 80% shares of Dunster Limited. Okay, direct ownership requirement for capital gains group of at least 75% share ownership can only be satisfied in structure X, as in other two structures, Abrid Limited will own or will have 65% and 70% shares. Let me repeat it again. First of all, we cleared that rollover relief can only be claimed. Abrid Limited can defer rollover its gain of sale of its building against acquisition of office building by Dunster Limited through capital gains group. Capital gains group will be formed in structure X when you have 80% share ownership, because that only satisfies the requirement of capital gains group. In other situations, you have lesser shareholdings. Okay, in other situations, you have lesser shareholdings. First, we need to make that clear. 65% and 70%, you cannot form a capital gains group. It will only be formed in structure X when your shareholding is at least 80%. Now let's move forward. Under capital gains group, disposals made by one group company qualify for rollover relief if disposal made is of qualifying asset and then within qualifying period another group company invests the proceeds in a qualifying asset. Under capital gains group, disposals made by one group company qualify for rollover relief if disposal made is of qualifying asset. So they all are selling building, and acquisition is also a building. So building is a qualifying asset, and qualifying time period is 1 year before and up to 3 years after the disposal date. Okay. Abrid Limited is selling buildings and Dunster Limited is also acquiring a building which are part of qualifying asset definition for rollover relief. So yes, first of all, it is qualifying asset. For qualifying time period, for qualifying period of investment, it has to be within 12 months before the disposal date or up to 36 months after the disposal date. See, now here you want to listen to me carefully. Revise the rollover relief up to 12 months before and up to 36 months after. Up to 12 months before and up to 36 months after. Now, Aberrade Limited is selling 3 buildings on 3 different dates. Queen's Building, Rune Building and Plie Building. These are 3 different dates. Whereas Dunster Limited is acquiring this building on 1st April 26. So let's make this the benchmark. Pick one date, either of sale or of reinvestment. Okay, so that it's easier to comment. Okay, now Dunster Limited is purchasing office building on 1st April 2026, which will be considered as a reinvestment made for rollover relief. Okay. Now this reinvestment can be made within 12 months before disposal and up to 36 months after disposal. So now let's see that whether it is within 12 months or 36 months period. Now all of the disposals of Aberrade Limited, October 26, February 27, July 27, all of the disposals of Aberrade Limited are after this date. So now the benchmark date is disposal date. See, this is the only confusing point here. The benchmark date is the disposal date 12 months before or 36 months after. October 26, February 27 and July 27. All of the buildings disposed by Aberrade Limited are after April 26. Now, all 3 buildings disposed by Aberrade Limited are after 1st April 2026. This means that qualifying period condition to be considered will be of up to 12 months before the disposal date. Here I know everyone will get confused. See, you have done reinvestment in April 26 and then you are selling after that date. Yes, rollover relief allows that you can have the reinvestments up to 12 months before. You can have reinvestments done up to 12 months before. Okay. Now, if you look at this Plie building, it was disposed on July 27. So if you go back 12 months from July 27, April 26 will not lie in it. Because July 27 to July 26. But for Rune Building and Queen's Building, which are disposed on February 27 and October 26, yes, April 26 lies within the 12 months period. Now listen to me carefully. Disposal dates of Queen Building, disposal date of Queen's Building, on, what's the date? On October 26, on 1st October 2026, and disposal date of another one is Rune Building of February 27 of Rune Building of February 2027 satisfies the rollover relief qualifying period as Dunster Limited purchase date will lie within 12 months before these disposal dates. Within this period, see, April 26 to October 26 within 12 months, April 26 to February 27 within 12 months. However, disposal date of which one? PA building of July 27. However, disposal date of PA building of July 2027 do not lie in 12 months period of reinvestment done before the disposal. Okay. See, this paragraph is the heart of this question. And there was a high probability that a student may make a mistake. But still, if you make a mistake, it won't give you a 0. It will just lead to a deduction of 1 mark. So it is not like that you will simply get a 0 or something. We discussed about the rollover relief, that you need a capital gains group. We discussed about the rollover relief conditions. Then we had a discussion that Dunster Limited purchased the building on April 26. Okay. All three buildings disposed by Apparat Limited are after April 26. October 26, February 27, July 27. Ideally, you should dispose and then reinvest in 36 months. But what some people do is that they first buy a replacement asset to be safe. So that's why the tax department has allowed that pre-12 month period. Fair enough. We will be using that pre-12 month period. October 26, pre-12 month. You have already invested in April 26, fair enough. February 27, pre-12 month. Fair enough. April 26 lie within it. Because from February 27, if you go back 12 months, it's February 26. So April 26 lie within it. But from July 27, if you go back, it will be July 26. April is more than 12 months. So yes, rollover relief can be claimed against disposal gains of Queen's building and Rune building. Rollover relief can be claimed against disposal gains of Queen's building and Rune building as acquisition done by Dunster Limited of office building lies within 12 months before their disposal date. Or you can simply say qualifying period, because we have already explained all of that thing. Okay, now. So yes, whether rollover can be claimed, we have identified that yes, rollover can be claimed against the Queen's building and the Rune building. Now, which of Apparat Limited gains should be relieved in order to get the maximum benefit? Okay, which building will lead to the maximum benefit? So now let's talk about it. I want you all to listen to me carefully. If you look at Queen's building, it has generated a sale proceed of 280,000. Now, patience and concentration is very important. Whereas Dunster is reinvesting 270,000. But there is one problem. If you remember, 2/3 will be used in the business and 1/3 will be rented out. So rollover relief will only be available on the 2/3 portion. Now let's listen to it carefully. Queen's building disposal has generated a disposal proceed of how much? Just listen to me carefully. Of 280,000. Let me copy the pound sign again. Of 280,000 and a chargeable gain of 150,000 pounds. Okay, 280 proceed and 150 of the gain. Reinvestment done by Dunster Limited in office premises as business use reinvestment of how much? He has reinvested how much? He has reinvested 270, and you will do 2/3 because rollover is only on business use portion. 270,000 into 2 divided by 3. So it's 180,000. Okay. Rollover relief is on business use portions only. Okay. Queen's building was wholly used for business, whereas Dunster Limited office premises as partial business use. Okay. Now, business use portion cash in hand will be, how much is your cash in hand? Disposal proceed was 280, reinvestment is 180. Okay. 280,000 was your proceed minus 180,000. So you have a cash in hand of 100,000. Okay. Lower of cash in hand 100,000 and gain of 150,000 will be chargeable now and rest will be deferred. Okay. Considering this, rollover relief will be of 50,000 pounds, as out of total gain of 150,000 pounds, 100,000 will be chargeable now. Sir, can you repeat it again? Yes, I will repeat it again. For Queen's building, disposal proceed is 280 and gain is 150. In Dunster Limited office premises, you reinvested 180. Okay. So 280 minus 180, cash in hand is 100,000. You all know this thing. Lower of cash in hand and gain. Cash in hand is 100, gain is 150. Lower of will get chargeable now and rest will be deferred. Okay. So out of 150, 100,000 will be chargeable now and 50,000 will be your deferral. Again, if you don't remember the rollover relief, just go to the summary notes, write rollover relief, and you will be able to find all the rules: land and building, plant and machinery. Lower of will be chargeable now, gain, cash in hand, non-business use rules, everything you have studied. Okay. Now, same paragraph I will copy and now I will write this same paragraph for which one? For the another building, which is Rune building. Rune's building. Just listen to it carefully. Rune building has a gain of 80 and proceed of 340. Just listen to it. Rune building disposal has generated proceed of 340 and a chargeable gain of 80,000. Please listen to me carefully. Rune building 340 and 80. Same thing will remain same because we are claiming rollover against either of the building, not against both. Reinvestment done by Dunster in business use is of 217 to 2/3, 180. Rollover relief is on business use portion only. See, these three buildings have always been used in the business. So for these three buildings, there is no proration. Proration is for Dunster Limited. Now, what is your business use cash in hand? 340 minus 180. 340 minus 180. So now your cash in hand is 160,000. Lower of cash in hand of 160 and gain of Rune building is 80. Now cash in hand is 160 and gain is 80. Will be chargeable now and rest will be deferred. So now your rollover relief will be 0 pounds. Why? Because from 160 and 80, 80,000 is lower. So out of gain of 80,000, 80,000 will be chargeable. Why? Because this is the lower of. Sir, I have literally got confused. No issue. Let's repeat it again. No issue. See, for Queen's building, disposal proceed was 280, gain was 150. Here it is 340 and gain is 80. You already know that how we have prorated the reinvestment portion. We have to look at the business use portion. Okay. So, Dunster Limited has got business use portion reinvestment of 180. Now we have to compare it with the disposal proceed. 180 minus 280. 180 minus 340. So you get the cash in hand. Lower of cash in hand and gain will get chargeable now. In case of Quinn's building, the cash in hand was 100,000. Gain was 150. So if 100 gets chargeable, out of 150,000 gain, you are getting a 50,000 rollover. You are getting a 50,000 rollover. But in Rune building, if you have a 160 cash and 80,000 gain, so whole 80,000 will be chargeable now. There will be no deferral. Lower of is becoming chargeable now and rest will be deferred. So if complete 80,000 will be chargeable now, there is no deferral. Okay. So it is beneficial to claim rollover relief against disposal of Quinn building, as it will have a rollover relief of at least 50,000 pounds, which would be zero if claimed against Rune building. Because in Rune building, whole of the gain is becoming chargeable. In Rune building, whole of the gain will becoming chargeable now. Because in Rune building, you have a lot of cash in hand. In case of Rune building, you have a lot of cash in hand. Whole of the gain will become chargeable now. In Quinn building, since disposal proceed is lesser, so 100 will become chargeable now. That is the cash in hand. Out of 150,000 gain, 100 becoming chargeable now, 50,000 will be there. Now, this was an interesting requirement and it was very much important that you are good at these loss relief and the rules of the rollover relief. I know that some of you guys might have queries in your mind, but I have already repeated it multiple times. Now, if you have a query, you need to listen it again, or maybe you can contact me on the WhatsApp number. You can ask me individually because we have already repeated it again and again. Okay. Now, let's move forward. Part 3. Recovery of value-added tax in respect of the purchase of office building. Now, let's move towards this part. Okay. Patrice has advised me that the unconnected third-party seller has opted to tax. Oh, this is an issue. Now, since the seller has made an election to tax, so he must have charged VAT on us, such that VAT will be charged on the sale to Dunster Limited. Calculate the total input tax which Dunster Limited will be able to recover in respect of the office building under the rules of capital goods scheme. Now, since the seller had done the opted to tax election, so he charged VAT on us. So now our recovery will depend on the use which we are doing. You should include calculations of the amount of VAT recoverable on the initial purchase of the office building and any annual adjustments required under the capital goods scheme. And then assume that the office building is rented out until 31st March 2030 and that Dunster Limited from 1st April 30 will use whole of the building for its business in the business use. So first of all, we have to talk about the initial recovery and then we have to talk about the later adjustment for how much marks? 4 marks. Let's go and read the VAT thing again and then draft the answer, a small answer since it's only 4 marks. Okay, so in relation to this value added tax thing, if you go and look at it, see, Dunster Limited will not make an election to opt to tax for the office building for VAT purpose. But since the seller has charged VAT on him, so now there will be issue for recovery of VAT, and since he will be using 2/3 of the building in his business, so he will be able to recover 2/3 of the VAT. If the election of opt to tax would be done, then whole building VAT would be recoverable. Let's see when I'll draft the answer for you. If you go and look at it, what is the initial recovery of the VAT since the seller has charged VAT on us? That is a requirement of 4 marks only. Okay. Dunster Limited will be able to recover 2/3 of the VAT in relation to the office building as its taxable use will be on two-third portion only and rest will be rented out. Okay, as opt to tax election is not made, therefore actual taxable use will be considered. Okay, initial VAT recovery will be how much? Now, what was the price of the building? It was 270,000 pounds. I will copy this pound sign again. 270,000 pounds into 20% VAT, which seller charged on you because he has made the opt to tax selection, into 2 divided by 3. 270,000 pounds into 20% into 2 divided by 3. So the initial VAT recovery will be 36,000 pounds. Now, then what will happen? The taxable use will remain same. Assume that office building is rented out until 31st March 30 only, and that from 1st April, Dunstall Limited will use it in its business. So now when did we purchase it? We purchased all of these things in April 26. So April 26 to April 27, 28, 29 and 30. 4 years, 1/3 is rented out. Then for the remaining 6 years, because for land and building, the adjustment period is 10 years. 4 years, 2/3 in the business, 1/3 rented out, and that was the ratio we used for initial recovery. But since for the remaining 6 years, we will be actually using whole of the building in the business, then in that case, 1/3 additional VAT will also become recoverable. Just listen to me. As land and building, or you can say office premise, as office premises purchased by Dunstall Limited is a land and building having value of more than 250,000. Therefore, its adjustment period will be 10 years for capital goods scheme. Okay, from 1st April 2026 to 31st March 2030, its taxable use will remain same as of purchase date, that is 2/3 use in business. Okay, from 1st April 2030, if I'm not wrong, yes, from 1st April 2030, taxable use will increase to 100%. Therefore, for remaining 6 years period, the total assessment period is 10 years. Okay, the total assessment period is 10 years. Okay, from 1st April 26 to 31st March 30, you can say this is 4 years. Okay, therefore, for remaining 6 years period, every year additional VAT recovery will be done of how much? 270,000 into 20%. 270,000 into 20%, that was the total VAT. You have already recovered the 2/3 portion. So now every year you will be recovering additional 1/3 portion into 1 divided by 3 divided by 10 years. Because the total adjustment period is 10 years. So will you repeat it again? Yes, I will repeat. Just let me write the final value. Divide by 3, divide by 10. So every year, additional recovery will be of 1,800 pounds. So, see, the initial recovery is of 2/3 portion. In the first year, you recover the VAT on the entire amount based on your taxable use. That was your taxable use because remaining was rented out. And since there was no opt to tax selection, so you have to use at the actual taxable use, and you will ignore the rented out portion, since the up to tax selection is not done, so you have to look at your actual use only. As office premises purchased by Dunster Limited is a land and building having value of more than 250, so the adjustment period will be 10 years. From 1st April 26 to 31st March 30, taxable use will remain same as of purchase date, that is 2/3 use in business. So in those 4 years, no additional change because you have already recovered according to 2/3. From 1st April 30, taxable use will increase to 100%. Therefore, for remaining 6 years, you will have to do additional recovery. You will be getting additional recovery because you recovered 2/3 only. So first you divide it by 10 years, your total VAT amount 270,000 into 20%, that's 54,000, divide by 10 years. So for every year amount was 5,400. Then 1/3, because 2/3 was already recovered. So for every year you will be recovering 1,800 pounds, but not together. It's a yearly recovery. Your yearly recovery will be 1,800 pounds every year. Okay. I believe if you remember the capital goods scheme rules, it wasn't a difficult thing. Now let's go to part B, becoming a tax advisor to BOFA Limited. Let's look at it. Okay. Let's look at this requirement. Now, our firm has been asked to become an advisor to BOFA Limited. Okay. See, if you remember that Dunster Limited, one acquirer was our company Albert, and there was one more investor, BOFA Limited. Send me an email which covers the following. State what is meant by the fundamental principle of integrity. If you all remember my ethics handout, I will show you. And the knowledge we require in relation to this principle before we agree to become tax advisor to BOFA Limited. Explain why our firm may have a conflict of interest if we become tax advisor to BOFA Limited, and the actions we should take to address such conflict. 5 marks. Let me show you my ethics handout in which we have discussed all of these things, and then I will discuss this answer. Okay, so this is my handout of ethics which we have discussed in our classes during the course. Now, if you remember in this handout, I have given you these routine examined situations using information from one client to another, unknown refund situation, factors to consider before accepting an engagement, error in previous return. These are 4 situations which are examined very much regularly. Then fundamental principles, like he asked about integrity, to be straightforward and honest in all professional and business relationship. Then detail about disclosure of information. Then situations about conflict of interest. When we are advising 2 clients which are competing in any situation, like advising husband-wife, husband, 2 companies in a personal capacity, 2 parties in a sale transaction. Here, there were 2 parties in the investment situation. Okay, because if you remember, like structure X was better for Alfred Limited. For this, structure X was favorable for this Abrid Limited, because it will get a group, 75% group, and BOFA won't get anything. Whereas in structure Z, BOFA will get a consortium relief, whereas Abrid will only be losing due to 5% lesser ownership. So there will be situations when interest may conflict. So if you look at it, first of all, what is meant by the fundamental principle of integrity and the knowledge we require in relation to this principle before we agree to become tax advisors of BOFA Limited. Okay. Fundamental principle of integrity requires straightforward and honest dealing while performing services as a professional accountant. Okay, it is also required from the clients with whom our firm will be dealing. Like if our firm deals with BOFA Limited, integrity is expected both from our firm and from BOFA Limited as a client while providing data. Okay. Now, why did I explain it a bit more? Because state what is meant by the fundamental principle of integrity and knowledge we require in relation to this before we agree to become advisors of BOFA Limited. So, what we need to know about BOFA Limited? We need to know about their business model, like whether they are into legal businesses. We need to know that whether they have been involved in any tax non-compliances in past, because that raises concern on their integrity. Okay. In relation to fundamental principle of integrity, our firm will require knowledge about any past tax non-compliances done by BOFA Limited, as it may create doubt on their integrity. Okay, that how many times they have been caught by the tax department. So maybe we don't want to deal with someone who is not straightforward and honest. Okay, further details about their business model, okay, details about their business model may also provide us knowledge about legitimacy of their activities. Okay, so what is the meaning of fundamental principle of integrity and what you need to know about the client, their non-compliances, any legal issue, legitimate business they are doing. Okay, see, our firm has been asked to become tax advisor to BOFA Limited. Now see, we missed one important thing. Send me an email. So we are writing an email to manager. So what you can do is just press enter, give heading email to manager. Otherwise you will lose marks in communication skill. Simple format of email to tax manager from tax supervisor. Since we are communicating to manager, so we would be either supervisor or a tax senior. Date, it was given at the start, 3rd September 25. Date, 3rd September 2025. Client we are talking now is BOFA Limited. Subject, factors to be considered before accepting BOFA Limited as a tax client. See, it's very important. It's very important that you ensure about these email things also. Otherwise, you will lose a simple mark in professional skill. Since it's computer based, so you can just press enter, move the data down. So to, from, date, client, subject, a routine thing. Now, what is meant by the fundamental principle of integrity and what we need to know about it? Then explain why our firm may have a conflict of interest if we become advisor to BOFA Limited. First, we had a discussion about integrity. Now we are having discussion about this conflict of interest. If you want, you can give heading, that's better. Otherwise, also it's acceptable. Conflict of interest may arise if our firm will also become advisor of BOFA Limited, as BOFA Limited and Abrid Limited both are investing in Dunster Limited, and since Abrid Limited is also our client, is also our existing client, therefore situations may arise when one tax advice may be in better interest of one investing party but harming another one. Okay, so that is what we call as conflict of interest. Like, even if you look at the scenario simply, structure X is beneficial for Abrid, whereas structure Z is beneficial for BOFA Limited because it will also get the consortium relief. Okay, So why conflict of interest may arise? Because these are two investors. So favorable for one may affect another. And the actions we should take. Use separate teams first of all. Keep disclosure to both of the parties. Okay. In order to deal with issue of conflict of interest, our firm should work with transparency, with full disclosure to both clients that we are dealing other one also, okay, who have a conflicting interest. Keep a full disclosure so that nothing remains hidden, because that's the most unethical thing. Our firm should use separate teams, for both clients so that they deal with their clients independently without getting influenced by other client. Okay. So first of all, we need to keep a full disclosure that, okay, we are dealing with other client also. Our firm should also disclose safeguards it is using in this situation. And what is the safeguard? Separate teams so that they don't get influenced. In question number one of advanced taxation, there is always this easy requirement of ethics, which you can easily do from this handout. Okay. Take consent, disclose it to them, use separate teams. You can use confidentiality agreement of your employees so that they don't disclose to each other. All of this we have already discussed. So, first of all, he asked that what is integrity? A very easy one. What we need to know about the client, why conflict of interest may arise, and what we should do. We should disclose it to our clients, first of all, that, okay, there is a situation of conflict of interest, and most importantly, we should use the separate teams. Done. Now comes the last exhibit and the last part of this requirement question, which is Camille, private client work, who is the sister of the owner of this Abred Limited. Okay. Sister of Patris, if you remember. Okay. So now we have to prepare a memorandum for Camille. Let's look at it, that how we have to draft it. Okay. So let's read about this part C. Camille, private client work, exhibit 3. Now let's look at the exhibit 3 also. We didn't cover it when we were reading the question initially. Extract from an email from your manager dated 1st September 2025. This is exhibit 3 about Camille. Background. Camille, who has always been UK resident and domiciled, has been a private client of our firm for a number of years. She is considering starting a new business which will supply consultancy services. It will begin trading on 1st May 2026 and will prepare accounts to 31st March each year. Camille will be the only person working in the business. Income and chargeable gains for the tax year 26-27. On 6th April 2026, Camille plans to dispose of a residential investment property and is expected to realize a chargeable gain of £15,000. Now you all know that on residential properties, the rate of capital gain tax is 18% and then 24% for higher rate taxpayer. Since it was a residential investment property, so private residence relief is irrelevant here. Camille's only other source of income in the tax year 26-27 will be salary from her current employer, Skylar Limited, of £48,000 per annum. So we are given some background about the details of his income and gains in the tax year 26-27 and his plan to start the business on 1st May 26. Alternative business structure. Camille is considering two alternative structures for her new business, structure A and structure B. Now what is structure A? If Camille adopts structure A, she will trade as an unincorporated sole trader. Like it will be a normal trading income. A tax adjusted trading loss of £50,000 is budgeted for the tax year 26-27. Subsequently, the business is budgeted to be profitable. So in the tax year 26-27, she will have a trading loss of 50,000. She has this employment income of 48,000 and she has this chargeable gain of 15,000. So gain of 15,000, employment income of 48,000 and then a trading loss of 50,000 pounds. Okay, so trading loss will offset your total income and once done with that, it can offset your capital gains. We'll look at it when we'll be solving it. Structure B. If Camilla adopts structure B, she will form a limited company, Parish Limited, to operate the business. The company's budgeted fees income for the first period of trading is £76,000. Parish Limited will pay Camille a gross salary of £33,000 for this period. Okay. Under structure B, the company formed will be a personal service company for the purpose of IR 35 legislation. If you remember that deemed employment income working, all of its income derived will be from relevant engagements to a small client. Okay, now the rules of IR 35 regulation, those will be relevant here. Personal service company IR 35. Okay, personal service company or IR 35 regulation, where what you do is that in situation of a small client, income received less actual salary, less employer and IC expenses done, pension contribution, 5% statutory deduction. If you remember all of these rules of personal service company IR 35 legislation. When we'll be solving it, we'll be actually going in detail of all of this. Now let's go and look at it, what he's asking. Prepare a memorandum for Camille's client file. Okay, so we are preparing a memorandum for Camille's client files. Okay, prepare a memorandum for Camille's client files to the files from tax supervisor. Okay, date is same 3rd September 2025. If you remember, the date was written at the start of the email. Date is same 3rd September 2025. Now the client is Camille. Okay, and subject is selection of business structure. There are two alternative structures for which we have to discuss. Okay, we are reading it. Prepare a memorandum for Camille's client files. Okay, here is the memorandum. Structure A. In respect of the budgeted tax adjusted trading loss of £50,000. Okay, explain with supporting calculation the relief available against Camille's income and chargeable gains of the tax year 26-27 and the tax savings as a result of this relief. So we have to discuss about the loss relief which Camille will be getting when she will be offsetting this trading loss against her employment income and the chargeable gains we just read here. Okay, so in relation to structure A, we have to discuss about the loss relief, a very easy requirement. This loss relief will offset the total income. Now, total income of Camille is her employment income. Gains are separate. First, it will offset the total income. That is how it will be relieved. Now, when you will offset the total income of 48,000, okay, your tax saving will be on how much amount? Your personal allowance will get wasted. The personal allowance is 12570. So the taxable income which will be relieved is 35,430. Just look at it while I draft the answer. Camille will be able to offset loss of her unincorporated business against her total income of 2026-27, which includes her employment income only of 48,000 pounds. See, her loss is of 50,000 pounds. Her employment income is of 48,000 pounds. Okay, let me copy the pound sign. Otherwise, you can always add the pound sign through symbol column also. Okay, now Camille will be able to offset loss of her unincorporated business of £50,000 against her total income of 2627, which includes her employment income only of £48,000. This will generate saving on what amount? 48,000 minus 12570, 35430. Okay, as due to offset of entire total income, personal allowance will get wasted. See, the loss relief is always against the total income, but the saving which you get is of the net amount, because the personal allowance getting wasted is also your wastage, is also your loss. So now tax saving will be of 35430 into 20%, since it lies in basic rate band 7086. Okay, now remaining trading loss of how much? 50,000 pounds minus 48,000 pounds used against the total income. See, here students get confused. Sir, we got saving at 35,430. Then why our loss is getting used of 48,000? See, loss hits the total income. Loss relief is always against the total income. Saving is on after personal loss value. So remaining trading loss of 2,000 pounds will be offset against Camille's chargeable gain of 2026-27 of 15,000 pounds on disposal of residential investment property. Okay, see, just look at the requirement. Explain with supporting calculation the relief available against Camille's income and chargeable gains of 26-27. So Camille will be able to offset loss of her unincorporated business of 50,000 pounds against her total income. Okay, this total income is of current year, of 2026-27. Why? Because you started your business in May 26. So that is also 26-27. And in 26-27, you only have this employment income. Okay, against her total income of current year of 26-27, which includes her employment income of 48,000. This will generate saving of 35,430. Okay, on the value on which you will be getting the saving. So the tax saving amount will be 7086. Now the remaining loss, which is of 2,000, will offset against the chargeable gain. Now there is a problem. See, when you will offset 2,000 against the chargeable gain, that is the important thing here. First of all, you will get the saving on that 2,000 pounds. Another point, please listen to me carefully. When you have cleaned up, just look at it, when you have cleaned up her income tax return, because earlier in income tax return, there was taxable income of 34,430. But now the income tax return has been cleaned up. So automatically the basic rate band will now become available to CGT. Okay. So in CGT, there will be a greater tax saving. Just wait and listen to me. Okay. Tax saving in capital gain tax return will be. Okay. Now what will be the tax saving in the capital gain tax return? I want you all to listen to me carefully. Believe me, you will be able to understand. Okay. Now, CGT before loss relief and CGT after loss relief. Just listen to me carefully how I am dealing with it. Okay. Now, chargeable gain on residential property. This chargeable gain was 15,000. Please listen to me carefully. This chargeable gain was 15,000 pounds. Okay. I will repeat each and everything again, but you need to listen to me. This remains the same in both situations. Okay. Now, loss relief. Here I am not doing any loss relief because this is before loss relief. And here I am claiming the loss relief of 2,000 pounds. Okay. This is the loss relief which we are offsetting. Then comes the annual exemption. That is same in both situations. 3,000 pounds. So that gives us the taxable gain. Just listen to me. Here the taxable gain is 12,000 and here it is 10,000. Apparently, there is only a 2,000 impact on the gain. But on the capital gain tax, there would be a greater impact for which you need to listen to me with patience. Capital gain tax. Now, when you are talking about CGT before loss relief, in that case, the problem was that here in this situation, your basic rate band was not completely available. Please listen to me carefully. Now, CGT in case of before loss relief, and then I will do the working CGT in case of after loss relief. Available basic rate band. See, our basic rate band was of 37,700. From this, 35,430 was already used. 35430 was already used. I will repeat it again. You just need to listen to me carefully. 2270. 2270. Okay. Now on this, the rate of CGT was 18%. Remaining gain 12,000 pounds minus 2270. Sir, will you repeat it again? Yes, I will repeat it again. 9730. Here the rate of CGT will be 24%. See, sir, why did we do this working? In case of CGT before loss relief, basic rate band was used against salary of Camille. Because in this situation, we are assuming that there is no loss relief done. We are assuming that there is no loss relief done. Okay, so 2270 into 18%, that is 409 pounds, and 9730 into 24%, higher rate of CGT, this is 2335 pounds. Okay, so the total will be without loss relief 409 plus 2335. It's 2744. Now, capital gain tax with loss relief. Okay. Now, in this case, what you need to understand is that this gain of 10,000 pounds, 10,000 pounds multiplied by 18% only, that gives us 1,800 pounds. In case of CGT with loss relief, complete basic rate band is available, as income tax return has been relieved against trading loss. Okay, so now in this case, capital gain tax, this was capital gain tax with loss relief. So this is 1,800 pounds. Okay, CGT saving 2744 minus 1,800 pounds. Sir, will you repeat it again? Yes, I will repeat. I know that it is something where a student may get confused. So this is 944 of your CGT saving. Just give me a second and then I will repeat it again. Now, see, first of all, in case of structure A, you talked about the income tax saving. That was very much simple. You had a trading loss of 50,000 pounds. You will offset against the total income of 48. Your saving will be on 35,430 because personal allowance will get wasted. You are a basic rate taxpayer, so here your income tax saving is 7086. Now remaining loss relief, remaining loss is 2,000 pounds, which will be offset against your capital gain. Okay, now what will be the tax saving in CGT? See, your gain was 15,000 pounds in both of the situation. You are looking at the tax before loss relief and after loss relief. Okay. Now you are saying that you are taking a loss relief of 2,000 pounds here in this situation, and here there is no loss relief. Annual exemption remains the same in both of them. So you have a taxable gain of 12,000 and here it is 10,000. So what will be my tax in case of no loss relief? In that case, my basic rate band was used. This 35430, I got it from here. It was used in income tax return against my salary. See, with loss, without loss, your entire CGT working gets changed. Why your entire CGT working gets changed? Think about it. Entire CGT working is getting changed because my basic rate band usage is getting impacted due to my loss relief in income tax return also. See, in some questions, loss reliefs are very much straightforward. Like for example, if the income tax return wouldn't have been getting completely empty, there would be sufficient income to use the basic rate band, then we would have just applied a single rate. But since now we know that income tax return is empty because the loss has cleared it out, so now CGT will fall to the lower band. Without loss relief, there was some amount in lower rate band and some in higher. But with loss relief, entire amount falls in the lower band. Entire amount falls in the lower band. See, it's very important that when you are solving the question, you do it wisely, you are alert. Okay, so total tax saving will be in income tax you saved 7086, will be 7086 plus 944. So that is 8030 pounds. Okay, so offset against the total income and then offset against the gain. Due to the offset against the gain, you offset only 2000. But the major impact was that your basic rate band got available because income tax return was cleared out due to the loss relief. So now the basic rate band became available for your CGT return. I hope that you have understood it. What about the structure B? Okay, what about structure B? Now let's look at that. What he's asking here. Structure B. In respect of structure B, calculate the employment income which will be deemed to have been paid to CAMLA and explain the implications of this payment on parish limited corporate tax liability and taxation of any dividend subsequently paid to CAMLA by the company. 13 marks. So first of all, we need to calculate the deemed employment income, which is a simple working of IR 35 format. Okay, let's look at it. Okay, so now we have to do the working of the deemed employment income. It's a simple format which we have to use. Let's look at it. Now, CAMLA will be receiving how much? 76,000 pounds in the period. Parish Limited will be receiving, sorry, the personal service company. It will pay CAMLA a salary of 33,000. IR 35 legislation will apply, so you have to use this simple format. Let's look at it. Income received by the company. Income received by Parish Limited. Okay, so we are doing this calculation of deemed employment income for CAMLA will be, okay, so income received by Parish Limited was how much? It was 76,000 pounds. Okay, less actual salary paid to CAMLA, that was 33,000. Yes, that's 33,000 pounds. Okay, less employer NIC on actual salary paid to CAMLA. Okay, now on this actual salary paid, you will calculate employer NIC. I hope you all remember the tax rates. On first 9,100 pound, it's 0% and then it is 13.8%. Okay, the class 1 employer and IC rates. Okay, up till 9,100, it's 0% and then it is 13.8%. So 33,000 minus 9,100, so it's 23,000 23,900, on which you will apply 13.8%. So that gives you 3298. 3298. Then less statutory deduction. You all know that this deduction is allowed to the company for its expenses, so that later on company has some taxable income also remaining. We have studied all of these things when we were studying this personal service company and IR 35 legislation. If someone has forgotten that, you need to, I believe, take that lecture again, because it's a big concept. It cannot be just revised while solving the past paper. So 3,800. So that gives us deemed employment income, including class 1 employer NIC. Okay, because the deemed salary which we are calculating, we need to calculate NIC on it also. So 76,000 minus 33,000 minus 3298 minus 3,800. So that is 35,902. Employer NIC on deemed salary. This employer NIC is not on actual salary. Now we are treating this 35,902 as a salary. So since this is the gross amount, 35,902 divided by 113.8% multiplied by 13.8%. Divided by 113.8 multiplied by 13.8. So that is 4,354. Okay, so notional salary for Camille, notional salary or a deemed salary for Camille, because it is the assumed salary which is being created on which the tax department will be taking the tax. 35,902 minus 4,354. So that is 31,548. So will you repeat it again? Yes, I will repeat it again. But you need to have some patience. Let's look at it. The first question was to calculate the employment payment which will deemed to have been paid to Camille. Okay, so this is the simple format: income received less actual salary less employer NIC. There were no expenses or pension contribution, statutory deduction, employer NIC on the deemed salary, and then you get the final deemed salary or the employment income. Okay, so this is how it's done. Now, this deemed salary of 31,548 and actual salary of 33,000 will be in total treated as employment income for Camille, on which she will have to pay income tax and class 1 employee NIC. First of all, for Camille, it will be treated like this. For Perch Limited, which is the personal service company, for Perch Limited, amounts paid as actual salary, class 1 employer NIC on actual salary, deemed salary, and class 1 employer NIC on deemed salary, all 4 items. This actual salary, NIC on actual salary, this deemed salary, and NIC on deemed salary. All 4 things. Amount paid as actual salary, class 1 employer NIC, deemed salary and the employer NIC on deemed salary will be allowed expenses from corporate tax return. Okay, after deducting these amounts, its remaining income will be equal to statutory deduction amount of 3,800. From that, if there are any expenses of the company, those will be deducted, and then corporate tax will apply on remaining profits. Okay, all of these things we have already studied. Okay, that on deemed salary employee will pay this, company will have this 5% amount remaining, it will deduct the profits, and then corporate tax will be payable. All the things you have studied. Okay, and explain the implication of the payment on parish limited corporate tax and taxation of any dividends. There won't be any dividends remaining. Okay, there will be no taxation on dividends for Camille, as entire amount of the company's income is converted to deemed employment income. Okay, taxation of it as dividend will lead to double taxation. See, think logically. Whatever amount the company received of 76,000, we converted it into deemed employment income. Now, if I say, okay, company had that much profit, company deducted this, and company paid you that much dividend. So either company will give me deemed employment income or will give me dividend. How it can give me two things at the same time? Due to the deemed employment income working, there is no dividend amount left, as whole amount has been converted to the salary. Okay, so I believe that if you just remember the personal service company rules, it wasn't a difficult one. First of all, the working of deemed employment income, we did it. Then the impact on tax liability and if any dividend is paid. If there is any dividend, there won't be any tax on it. Maybe in the normal world, the company may be paying the dividend to Camille. But for the tax purpose, there is no dividend left because the entire amount is converted to salary and NICs. Salary, NICs, NICs. So company in the tax world do not have any amount remaining to pay the dividend. So if you look at this entire question, I would say there were some areas which were difficult, but on overall it was a doable paper. Like purchase of capital items, goodwill, structure building allowance, intangible asset relief, it was an easier one. Then for loss relief, having knowledge of all groups and consortium, it was also doable. Then rollover relief of capital gains group, it was also easier, but these dates were critical where a student may have made a mistake. Recovery of VAT, that was very easy. Ethics, very easy. Then here structure A, loss relief. In CGT saving, maybe a student make an error, but if he has done good past paper practice, this is also something which is already taught multiple times. Then deemed employment income is just simply a format to follow, nothing else. Okay, so with this, our question number 1 of this official mock exam is done. In the next class, we'll move forward towards question 2 and then question 3, and so on. Our series of past paper discussion sessions will be continuing forward. I hope that you guys are understanding the things. If you have any query, always feel free to contact me directly on my WhatsApp number. Okay, thank you everyone.